Yeah, well, happy holidays to you, buddy.
Yeah, you too, definitely.
Yeah, so metals under pressure, but I've seen, I think everyone should put your stream in there if you're interested in metals. Um, follow Bob, follow Bob on X at Profits Plus ID, which stands for Idaho, because he posts some great charts. In fact, yesterday, Bob, you were showing, I believe it was the World Gold Council and how the stockpiles have been rising. What was your point with that?
Well, it just goes to show that, the markets try to make the metals look like a pet rock. And obviously BlackRock and Vanguard and there's a huge push for digital and crypto and it's
Yeah,
this idea that um the metals are no longer relevant, I guess, in today's
yeah,
society.
yeah,
And it just goes to show, that chart was kind of an eye-opening one where it's like, hey, these central banks are building their reserves back up to where they were back in the 60s. Now, one person made a pretty good comment, in terms of reserves relative to, their entire balance sheet, maybe that's a lot lower than it was back in the 60s, but the idea is the trend, trend is your friend, I guess you could say.
okay. All right. So they're building back stockpiles they haven't had since the mid 60s. So
Yeah.
what's the point is, um, they fear a 60s type of economy. Is that
Yeah,
why they're
either that or they're trying to get to, build up neutral reserves, neutral reserve assets, whether it's the dollar or their own currency, coming under pressure. That would be my take is that there's a growing concern with all this debt and, this idea that there's no way out of it, and you're bringing in a new administration, which brings in uncertainties, and the direction that this country is kind of has been going for some time in terms of you know basically borrow and spend and
Yeah.
you can play the with the maturity levels and so forth like Yellen did, but debt is debt, and that's one way out of it is to inflate it. So
So any comment on the gold silver ratio where gold has really been outperforming and
yeah,
still doesn't look done. I think we're going to go low to mid 90s on this.
yeah, that this has kind of surprised me how it ran back up that high, given what I'm kind of seeing on the physical side, the industrial side, demand for actual silver and so forth. And I put out these charts. I talk about the exchange for physical premium, which is that difference between the the London spot price and the New York futures price, the lead month futures contract, and there's a typical what they call spread trade there, and a lot of institutions, a lot of professional industry players use that EFP as a way to uh, hedge the uh, the difference in the spread. And typically that spread, just like a futures contract, as it gets closer to expiration, or like options, as it gets closer to expiration, that spread should be dropping naturally, because as you get closer to the end of the lead month futures contract, it goes to parity with the spot price. But what you're seeing though is really the last 2 weeks or so that EFP is doing the opposite. It's actually going up, not down, and that's causing potentially a lot of losses in the banks, because the banks typically are the ones who short the EFP.
Yeah.
Um, and so what we've seen is, and this is where it gets really esoteric, but there there has been a almost a demand for physical 1,000 ounce bars, and then to put them onto the exchange or use them as collateral
Right.
for the COMEX, and then short the futures contract against that. Um, but what's happening is the spot price isn't really reacting to this. It's the premium on the 1,000 ounce bar that's been going up. And so it's I think it's been very frustrating, I think, for investors watching this, especially like for me watching this, because it's like this doesn't make any sense if there's such demand for 1,000 ounce bars, yet the only thing that's going up is the premium for those products, not for the metal spell or the spot price itself.
Okay. Yeah, I'm looking at this. It's really silver looks like, I don't know, 27, 26 is coming. I don't think we get a good rally in silver until the dollar turns. Gold can do, but I think that may be the reason behind it, that gold can fight the dollar. Silver has a harder time doing that. So anyway, I'm interested in what you saw in the ETF and SLV because that could be a fuse that lights it. Do you think they
Yeah.
could hold these positions, say for and be successful for about 30 days, 60 days? Because that's when I'm looking for lows to come in the next month or so.
I mean, anything is possible in this market. The question is, how much capital does the banks have, um, and how much do they want to risk by, holding the price down, so to speak, would have to take, a broader, I guess, market to be maybe negative on the silver price. But the way this EFP is working, it's working opposite against what maybe the price action is saying. I mean, when the EFP blew out back in 2020, for example, that was the lead to a massive rally in gold in March of 2020 when you had that big drop.
Yeah,
Uh, um, and
COVID.
then yeah, COVID, and then you also had, which people may not have realized, the same thing happened with silver about a month later, where that EFP blew out, and that ignited a massive rally. So these, and I look for these types of things because they're irregularities. They're not common. They don't happen all the time, and so
Right.
it's telling us that either there is a
There's
liquidity
a
constraint.
squeeze going on. Squeeze is happening.
Yeah, there's some type of liquidity event that's happening. Whether it's like you said, upside or downside, it's hard to say, but and it could be, indicative of the overall market too. The metals are extremely sensitive when it comes to liquidity, and if things are blowing out and not making sense in the metals markets, maybe that's something that's coming uh, for the broader market. It's obviously it's nice to have a crystal ball, but we can only watch the crumbs that are in front of us.
Yeah. So, but they're important. What you're seeing is that there's people stuck with a lot of paper that they can't deliver against. And they're
Yeah,
they're taking extreme measures, looking for substitutes because the contract specs are not being met because they can't find that inventory.
right. Now, yesterday, I didn't post this, but yesterday the platinum EFP blew out $20. I mean, the
All
platinum, I
right.
think the lead month contract's January, but
Yeah.
these things don't I mean, obviously, the last 2 weeks of the year, it's extremely illiquid, and you can get some volatility. But these EFPs are big markets. I mean, you have to be a very, very big player to be to really be involved in this, because it's tied into the entire spot futures markets. I mean, it's the bedrock of those two markets, kind of linking them together. And so
Look at this, Bob. In 2 years, palladium has lost two-thirds of its value.
yeah,
It's got
platinum
to
was the
be.
one I was.
I know, but that was palladium.
Yeah, yeah.
Platinum's been sideways for 3 years.
I think
Right?
platinum's been sideways
Right?
for it's been sideways for 20 years.
We got we need more catalytic converter demand. Huh, buddy? Eh, anyway, what's the feel from the public out there? They're discouraged.
Oh, complete. It's from what I kind of see out there, the public is extremely frustrated. I mean, obviously on the miner side, they're, people are
Oh,
throwing in the towel. They're done with it. I mean, this makes no sense. They're just, yeah,
I'm buying them next year after
yeah,
this tax loss selling. I'm buying them.
yeah,
They're cheap.
yeah, there's a lot of frustration out there. And of course you got Bitcoin and all that stuff
Oh,
going
right.
straight up in your face. And it's like, yeah, and the funny thing is you look at Newmont Mines, I mean, this thing has done a complete round trip. I mean,
It's a higher low though, right here.
yeah,
Look at the
it's
low in
potential.
24.
It looks like an inverted head and shoulders building there.
Well, you're the technician. I'm just a host of face, bro.
Yeah. Well, check out this one. This is AMARK, AMRK. This is the biggest wholesaler. They own a lot of retail dealers. They have an interest in Sunshine Mint or Sunshine Mining or Sunshine Mint. A bunch of other refinery minters and so forth. This is the industry basically. And if you look at it, this thing has done a complete round trip
Yeah.
from early 2024. That's what the industry has been going through. And I've been trying to explain that to people and to clients that there's risk building within the industry. The balance sheets are stacked. They may have a lot of metal on hand. A lot of people have been selling metal back going
Yeah.
into IRA season. So a lot of dealers, you see the bids, especially on the spot dealers, the physical, online guys, bidding $3 under spot for 100-ounce bars. $3 under spot for 1 ounce rounds. I mean, it's horrible. So the public is seeing sort of this, not just the price action, but when they go to
Yeah.
sell back, they're getting really slapped in the face
Nothing.
here. Right.
Yeah.
Yeah, they're not
Yeah.
making any money at all. The ones who made money the last 3 years have been the dealers, hand over fist. And this is something that I've been trying to explain. Why support, these online dealers that really have built a model for themselves, not necessarily for like a market maker, for example, that's actually trying to do right for the client. Uh, all they're doing is just widening spreads, based on supply and demand.
I bought some metal from Bob, and it was a straight deal. Just in case you guys want to, around $27. I 26. I'd be buying it. Anyway, and the miners too. I mean, that's great to hear because that's my plan. A lot of this is tax loss selling in the miners too. Most people reacted. They had FOMO after they had doubled a lot of these things or tripled, and they buy the miners. But yeah, there are some guys that have been right about the market but wrong about silver, wrong about bonds. Yields are part of it too. Do people feel squeezed, Bob, because maybe they have to deal with floating rates and these rates are bothering their
Yeah,
models?
definitely. That's, it's impacting the industry. The cost of carrying inventory
Yeah,
has been rising throughout the year. So yeah, that you're and like you said, the public is maybe saying, hey, listen, we're not in a zero interest rate environment anymore. I can throw my
right.
money into a 5%, T-bill or 4.5% T-bill and get some kind of return without that volatility. So you're right. It's these things change the perceptions of investors. But I think the underlying theme with the metals, I don't think we've seen any type of top. I don't think we've seen anything that resembles a cure to balance sheet, deficit spending and so forth. We're still got a long road ahead, and I think the metals at some point will lift off again. They tend to move when people least expect it, and like you, I kind of watch the sentiment to get a feel for the frustration out there. And it's definitely building out there, no question about it.
Okay, so I'm thinking, Jan Feb. So we'll see what happens. Maybe one more flush in the stock market takes it down, and I'm going to be buying that, and 95 about on the gold silver ratio. And so, guys, this should be on your shopping list if we get some type of washout and there's follow through on the bear raid that we had in December. and we're not just going to blow off to 6,400 in the S&Ps. Market sells off, maybe we get a break. But at $95 the gold silver ratio, then I think you could be trying silver again. Here, let's just look at it one more time, Bob,
Yep.
and
Yeah. One other
wrap it
thing.
up. Go ahead.
Yeah. One other thing is, this SLV, and I posted this last night. 30 million shares have been shorted
Yeah,
on SLV in the first 2 weeks of December, which is really odd given that the last 2 weeks of December typically is a very positive or seasonality, very positive time for the metals. Why anyone would want to step in front of that seasonality um, is somewhat it makes no sense. But that's you're talking I think the highest short interest during the year was about 31 million shares, and so now you're up to about 51 million shares short on the SLV. And you
yeah,
see that the borrowing fee starting to rise as well. And these things, obviously, I'm watching. It's a little bit more technical, I guess you could say, but you watch these things because when that borrowing fee gets too high, and stock to borrow, the availability starts to drop. That's typically when you start to see a potential squeeze start to happen.
yeah.
So these are all things
So
to
it's
watch for.
it's happening and but not reflected in price.
Correct.
So it makes and all of these things are pretty well known. You know, I mean you have to dig a little, right, Bob? But they're out there. Um,
Yeah, I mean, yeah, to give you an idea, the 1,000 ounce bar premium, when I talk about premiums, on an industrial level, when you're buying it from the refiner, back in September, to buy a 1,000 ounce bar is about 7 cents over spot. If you're buying it with, taking delivery in New York, for example, at a
yeah,
major a COMEX
bank,
depository. Now
yeah.
that same premium is about 50 cents over spot. It's the premium has jumped, not the spot price, which is kind of strange with this EFP that's been reversing higher. So those are the types of things I'm trying to maybe bring to light.
Okay, well, 95 in the gold silver ratio is not any trip to Hollywood. It's just retracing back to where we were here. And, this was a big high up here when they were giving silver away. So maybe, we finish this sideways correction and then the gold silver ratio takes a hit like it did here. So next year, I think it peaks at 95 and we go to 50. So that's a notes for Pinkert for you, Bob. All
Yeah,
right.
that's one hell of a move right there.
All right. Anyway, I appreciate you keeping me informed, when you come here and what's going on. You have levels you're looking at in gold and silver that look attractive to you?
I mean, right now, from the physical standpoint, I'm buying silver here. There's the idea of trying to catch. I mean, you're more of a trader, so you're trying to really catch, maybe more of that lower that try to get within 10% of
Yeah.
that low. For me, what I try to do is because it's more long term, I'm really looking at the longer term picture is trying to get people because a lot of times when you do get that flush, people get scared, they end up not buying, and then you get the reversal back up, and then they don't want to chase or feel like they're chasing. So it's just trying to again try to get people sort of interested when price action's showing a good value, but again at the same time not charging a high premium for the products, which is I think really key. That's going to determine whether you can make money in this thing or not. But yeah, gold is a little bit more difficult. I mean, obviously there's a lot going on in the next month. You got Trump taking office.
Yeah.
Yeah, I mean there's a lot of uncertainties out there that obviously could.
Hey, Bob, what's your take on the drones?
I've heard that it's I've heard that some of these were early on they were testing companies that were testing larger size drones that could actually um, uh, potentially carry large forms of cargo,
Payloads?
I guess. But
Yeah.
I don't. Who knows? I mean, at this point, they're all over the place. You could have copycatters. I mean, I mean, if it is nefarious and they're just lining up for some sort of almost like that movie where the president got attacked. I forget what this was called. Um, uh, we're all in trouble because I mean that's obviously drone warfare is obviously the next phase of or
Yeah.
the future potentially of uh, field warfare.
Yeah. Okay. I was just wondering if, maybe there was some alien invasion to come and, pick up a little silver demand and drive prices higher for everybody.
Either
And they,
that or they're
huh? They're
yeah,
here for our
or they're
metals.
bringing they're bringing a million trillion tons of gold from an asteroid.
Yeah, yeah. Anyway, Happy New Year, buddy. Uh,
Definitely you
I,
too.
I hope 2025 is a great year for you and all your clients. And um, by the end of 2025, we see $50 silver. Okay.
Yeah,
All right, buddy.
sounds good.
Uh, so everyone follow Bob on X at Profits Plus ID, Bob Coleman. And we'll see everyone on Monday. Don't just count your pips, count your blessings, everyone. Have a great weekend. Adios. Thanks again, Bob.
Thanks, Dale.
All right, see you.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.